everyone. Welcome back to the Caderna podcast. I'm Brian Caderna. With the war in Iran continuing to drag on, we're all getting very familiar with weapons-grade uranium, as well as the importance of global supply chains with the closure of the Strait of Hormuz. Joining me today is an expert on mining uranium and other precious rare earth metals. Thomas Lamb is an internationally recognized entrepreneur and executive in the resource sector. His career includes identifying and advancing district-scale mineral projects from early exploration through to development. His work has spanned uranium, gold, cobalt, and critical minerals across North America, Mexico, Russia, and Africa. He's currently the CEO of Myriad Uranium Corp and is leading the advancement of one of the most historically significant uranium districts in the United States. The Copper Mountain project in Wyoming encompasses over 18,000 acres and is underlain by an estimated uranium endowment exceeding 600 million pounds. Myriad is in the process of selling 90% of its Red Basin, New Mexico project to Subatomic, a VC-backed nuclear fuel cycle company, while retaining a 10% free carried interest, a transaction that both monetized a non-core asset and established a strategic alliance at the frontier of the nuclear fuel supply chain. He's also the CEO of J2 Metals Incorporated. Lamb oversees a diversified exploration portfolio spanning 3 jurisdictions in Mexico, Canada, and Alaska. He served as a director of Urazolato, hopefully I'm pronouncing that right. It's Russia's second largest gold producer and a company operating over 11 mines across Russia. He was also a founder of M2 Cobalt Corp, an East Africa-focused explorer, which was acquired by Jervis Global. Thomas Lamb continued on as an executive at Jervis. Beyond the resource sector, Thomas Lamb is the co-founder of the Clarity Foundation, a nonprofit dedicated to combating misinformation and disinformation, work that has been covered in the top-level journal Nature. He has a master's from the London Business School and a law degree from the University of British Columbia. Earlier in his career, he was a mergers and acquisitions attorney in Vancouver in the mining industry. Without further ado, please join me for this wide-ranging conversation as we cover the importance of these commodities, how they work throughout the world, and how they affect global economies.
Is going to require work and time and sweat and toil.
If money wasn't an issue, what would I be doing?
Don't worry about it. You'll figure it out.
Change is the only constant.
The Caderna Podcast.
Further ado, Tom, welcome to the show.
Thanks. It's great to be here.
Yeah, I'm happy to have you on here. And I know a lot of the intro I was just describing talks about uranium. Maybe just to kind of get the ball rolling here, can you tell us why it's such a hot button issue today, why everyone's discussing uranium, which maybe 10 years ago, the general public didn't know all that much about?
Yeah. There were a series of events in history since World War II, when, of course, uranium used to make the bombs, and everybody flipped to using it to generate electricity. Of course, you use uranium in terms of electricity to boil water, create steam, drive a turbine, and generate electricity. And once you've built these nuclear power plants, they're very cheap to run once they're built. They're expensive to build, but then cheap to run for 75 years. You can run them sometimes longer. So unfortunately, there was the 3 Mile Island nuclear incident in Pennsylvania, 1979. That was a very minor accident, but it got, especially the United States, publicly thinking about, what if there are nuclear accidents and that sort of thing. So the U.S. uranium sector just sagged after that. Price of uranium dropped. The U.S. was going to build a lot more nuclear power plants, and it just didn't. But the rest of the world continued. Russia, Europe, France generates 75% of its electricity using nuclear. The U.S. to this day generates 20% roughly of your electricity using nuclear.
Mm-hmm.
And then of course, there was the Fukushima accident. I think that's 2010 or 2011, which in Japan, that also got the world, sort of diverted the world away from nuclear again and uranium to generate electricity. So what you had is long-term underinvestment in in finding more uranium in the ground, building mines, and then advancing the extraction of uranium. So the world up to this point has been eroding civil stockpiles of uranium. That's government stockpiles, utilities have stockpiles of uranium, and then weapons. Weapons have been downblended, these nuclear weapons from Russia, the US especially, downblended to make nuclear fuel, because a weapon is 90% plus uranium, and the nuclear fuel for reactors is 3.5 to 5%. Uranium isotope 235 instead of, that's the isotope that you want to concentrate up to a high level for these power plants.
Got it.
But things have changed. China is building nuclear power plants like crazy. We've got data and AI coming. Now we need cheap electricity. The world needs it. And if the US is going to, for example, keep up with China and data, AI, et cetera, we now have to go full throttle. There was the climate issue up until Trump administration was elected. That was a focus too globally of climate change, et cetera. The world wanted to build more nuclear power plants because they're clean. That has been deprioritized, but nevertheless, everybody understands you need a lot more electricity now, and big investment in the US and worldwide in nuclear power plants with no uranium to fuel these plants. That is why it's topical after all that thread.
Yeah.
We need to find a lot more uranium now. That's the exciting idea here.
Okay. So the reason, and I've heard this kind of story before, so the reason that we got so far away from, hey, let's use uranium and nuclear as kind of a very clean, effective, efficient source of power was mostly based on fear and those isolated incidents.
You got it. And I forgot to mention Chernobyl, of course. I think that was 1956.
Yeah,
that was a big one in Europe. Of course, you've had Chernobyl, you have the Green parties throughout Western Europe, Northern Europe. They directed everybody away from building more nuclear power plants. The French just ignored that. They continued to build and have advanced their sector, but Germany, Scandinavia moved away from nuclear. Also, the Russians really pushed Western Europe to fund. The Russians funded a lot of these groups that were trying to divert Europe away from nuclear so that Western Europe would be reliant on Russian gas for their industry. That's a bit of a backstory.
So just again, for kind of like the layman out there that's saying, okay, there's this connection between uranium, nuclear, and a very, very effective energy. What amount does it take because isn't that the selling point, that it's ultra efficient if we're comparing it to fossil fuels and such, that it takes a very, very small amount of this to power the plant? Is that correct? Do you have any kind of just what that looks like?
I used to know these ratios off the top, I've forgotten, but I think it's, for example, you need 1,000 times more coal by volume versus uranium to create the same amount of energy or heat. So, you can have a very small amount of uranium. And I believe this is just uranium, naturally occurring uranium, which contains, among other things, roughly 93% uranium-238 and 0.7% uranium-235. And it's only the 235 we're interested in. But I believe it's the uranium versus coal. I think you have it's 20,000 times more.
It's an enormous spread.
It's incredible, and that's what's going on.
Even if it's close to that, it seems like a no-brainer. And so you mentioned that the way that a lot of the countries are doing this right now is by, if I heard you correctly, deblending their actual nuclear weapons.
We've been doing it a long time, since the various START treaties and other treaties in the early 1980s between Russia, Soviet Union and the US, downblending. So you have huge nuclear weapon stockpiles and say we're going to cut it by 80%. You take all of that and you mix the high test uranium with other materials and less rich uranium to make reactor fuel down 3.5 to 5% uranium-235.
Got it. And then how long, I know I'm getting a little technical here, but I think it helps paint the picture. How long does this last? If you say, okay, we downblended one nuclear warhead, we extracted whatever the part of the uranium that we want that then could be utilized in a nuclear power plant. Is it something like with natural gas where we have to continually feed it, or is it something that almost recycles itself and continues to operate?
So, one point I want to make is you can store the stuff forever on human terms. So they downblend, they put these things in barrels and they send it off to a storage facility, and they can, use it for thousands of years to come. The uranium is good for that. Then
Okay.
once there's something called the fuel cycle. You take that uranium, which is 0.7% uranium-235, which is the isotope you want. Then you have to put it through something called the fuel cycle. You take it, you mix it with uranium hexafluoride. You create something called hex, that's a gas, and you spin that in a centrifuge. And so when everybody's looking at these centrifuges in Iran, under the mountain in Iran, or all around the world at these, the Russians do it, America does it, Canada, Germany, et cetera. You basically spin this uranium hexafluoride in a centrifuge to get the percentage of uranium-235 up from 0.7 to 3.5 to 5% for a large-scale nuclear reactor, which just for your, in case your audience is interested, a large-scale reactor, you can think of it as using 500,000 pounds of uranium per year. That's the consumption. So you can then do the math, how many, say there are 200 large-scale nuclear power plants. 400, sorry, 100 in the US per year. And that's the consumption we're looking at. So what happens is you concentrate the uranium-235, you convert it. Once you've enriched it, you convert it, and you make fuel pellets out of it. This is uranium-rich fuel pellets, which you put in rods. You make fuel rods with them, and then you put the fuel rods in bundles into the water at a nuclear power plant, boils the water, creates steam, etc. But what happens is, and I think this is maybe where you're headed, is the fuel pellets, the percentage of uranium-235 in the fuel pellet goes down during this process. And every few years, you have to swap out the rods and put in fresh ones. Well, you can take those fuel rods and recycle the rods so that, say, the percentage of uranium-235 to make up a number has gone down to 2%. Well, you can put it through a process to take it right back up to 5%. And then just keep.
It's like recharging a battery almost.
That's right. You can do that. Yeah.
Okay. That's really interesting. So as we're talking about this, I find it fascinating because I think it is the future, and I almost struggle with like that. Obviously, it's very scary if you have a nuclear meltdown. It's terrifying. I get it, but that has been like the only real roadblock between going from all of these fossil fuels and the wars and all the things we've had through history over this, when we have what seems like a win-win where it's very effective, very efficient, very clean, as long as it's done safely. It just seems crazy. It's like, why are we not racing forward on this?
It truly is the ultimate. And I do know lots of people who are worried about it, safety reasons, historical reasons, it's psychological, but now things can happen, but safety is very high. You even saw with Fukushima, the consequences of the Fukushima accident were really minimal on human and ecological terms. I don't want to minimize it, but when these accidents happen, the things are much better than people understand. And the safety now is absolutely excellent. You can fly a jet airliner into these things. You can fire missiles at them, et cetera. They're now designed to be very, very safe. We understand most of the risks. There's always things you can't quite expect. So yeah, it's extremely safe. And countries with a real science focus, of course, in Western democracies, this is a marketplace of ideas, and even bad ideas can take over because they can be boosted in the info space, in the information space, which you see all over the Western world.
Sure.
Media, et cetera. But science-focused countries, France, China, India, where there's, you can't call China a democracy. India is a sort of hybrid democracy, but they are very focused on climate change, right? Especially China, and environmental. And they know they need cheap electrons for the long term to power their data and AI in the future of China. So they are building nuclear power plants like crazy. And they are very safety focused too. China's a very safety focused place. It's not, there has some of its own issues, of course, which we're probably familiar with, your audience is familiar with. But they want to design these, they want to have a long-term 100-year nuclear power plants and a vast fleet. They're planning and building, I would say, up to 100 additional new nuclear power plants here coming. And, the race is on. And so others understand this is the future. Nuclear is the future.
And is that, I know we'll get into a little bit of this as we go, but when you talk about like the US versus China, here we got the two global superpowers. and he said that China is kind of full speed ahead on nuclear power and building upwards of 100 plants as we speak. Is that a competitive advantage? I mean, obviously, it sounds like it is, but is there anything from when you look at like the actual safety of the countries, of us on a global standing versus China? It's something where if they got ahead of us in building this power, does that give them an inherent benefit outside of just saying, hey, we can use more AI or we're hogging more of the materials, which we'll talk about soon? But
It's an enormous advantage. Imagine, first of all, the U.S. has to get on its horse. The federal government is working on this, but you have the lobbyists for
Mhm.
oil and gas and other, and et cetera, that really, everybody is competitive, so they want to um, undermine nuclear, and that's been part of the story for the last 40, 50 years too. Is if you're in the oil and gas business and you want to sell, or coal business, a huge
Mhm.
lobby in the U.S. You want people to get their electrons from nuclear coal-fired power plants, right? China has just dispensed with that and said, nuclear is the future. Let's build as many as we can. They're going to have, for example, 3, 4, 5 cent electricity per kilowatt hour, right? In the US, you're going to have, with coal-fired gas and then some nuclear, 15, 20, 30 cent electricity, right? Even at scale. So what does that mean? You can think of it as from an economics point of view. Imagine two families, each making $100,000 a year. One pays $30,000 a year for gas for all the vehicles and to operate their lives, and the other family pays $10,000 a year for fuel and has $20,000 left to do something very productive with that money. That will be China. You're going to be paying 5 cents a kilowatt for their electrons, and the U.S. is going to be paying 20 or 30, and there's just no escape from that. So that's what everybody has to lean into this. I will
Yeah,
mention something else in case you're interested. China
sure.
just cookie cutters these nuclear power plants,
Mhm.
and it gets their cost per nuclear power plant way down by doing that. So the teams that build whatever parts of it just move on to the next one. And
Mhm.
they're sorry, I don't know why this is, and
That's
they're just got the dogs going.
that's all right.
And they get very good at it. So whereas in the US, to build a large scale nuclear power plant, they're all one offs. They typically are one offs because they evolve the design. So you build one for $20 billion, then you build a new one somewhere else. Maybe it's a different consortium uh,
Mhm.
that is building. It's another 20 billion, and they evolve the design and the fuel bundle. China's doing the same thing. And so they get the time to build down from 10 years down to 5 years. They get the cost to build down from 20 billion to 5 billion, and then they can punch them out. So they have the advantage, not only the ultimate advantage in the future of the cost per electron because of it's already built, but the cost to build is much lower because they're
Yeah,
et cetera, like
sure.
IKEA furniture.
Yeah, it's right off the shelf. So it's not just kind of like these fears of safety and stuff. You're saying it's a lot of like the lobbyists and things like that here in the States.
Yeah,
Whereas China, communists, they can kind of, the government snaps their fingers and says, this is the right way we're going. That's it.
that's right. Yeah. Now
Yeah.
you end up with a much better result in the U.S. long term in terms of society. That's my view. There are
Mhm.
lots of pros and cons here, right? So but China's going to have cheap electrons because they can just make a decision and build a
And
lot
go
of
for it. Yeah.
from that point of
So just to kind of take a step back, big picture, really interesting field that you're in,
view.
obviously, but you started out as a M&A attorney, mergers and acquisitions.
Yeah.
How did you go from law school to mining uranium? Where?
Oh, well, if you're from Vancouver, Canada, and you're a professional, let's say lawyer, accountant, scientist, et cetera, there's a good chance you'll be in mining. This is one of the centers of mining in the world. Vancouver, Melbourne and Perth, Australia, Toronto, and then there are just a few other places in the world where there's just tons of mining companies. It's what we do here. So
Okay.
globally, I would say maybe the majority of new mines found in the world and mining companies and projects, they come through Vancouver. So little known fact.
Really?
Yeah. So the US does not do much of this. If you go around the US and you go to exploration development projects in mining, generally Canadians that are there. So
Huh.
we have the expertise, we have the money, we have there's a big domestic US industry, but You've got lots of big companies that are big multinationals that operate inside the US, but Canadians are the international entrepreneurs in mining, and we have do the finance and the technical expertise. So I was already an M&A lawyer doing resource transactions globally. Yep. And then I met a woman, we fell in love. We were going to move to London, England, be lawyers there together. So I quit my job and I said goodbye to everybody, but that didn't quite work out. Plans changed. I ended up in Africa on a surfing adventure, contemplating what I really wanted to do. I was supposed to go back to Canada, continue being an M&A lawyer. And I thought, no, I'm going to get into mining as an entrepreneur. Came back eventually to Canada, connected with some friends on the street, an old friend from elementary school who's a very smart engineer. He and I went for coffee. We decided, hey, let's start our own mining company. Cocktail napkin at the coffee shop. We each put some money into the bank account to start, incorporated a company, did not know what we were going to do. And 5 years later, that company was worth several $100 million, producing gold in Mexico, 2005, 2010. And that's how the sector works. You need,
That's amazing.
We're entrepreneurs. Yeah. And
when did you do that? Like when you met your buddy and we're just like, hey, let's see what we can do.
We met on the street in 2005. We hadn't seen each other since high school. Hey, great to see you. What are you doing? I said, well, I'm back in town. He said, well, I've left some work in Northern Alberta that he was doing. Well, let's start a mining company. We've always, we're entrepreneurs. We know how to do it. Let's take a chance. Most of the time, these things fail, like any business. But we got lucky. So there's selection bias in the mineral sector. If you see an older guy like myself who's still going and still doing well, they did have some luck in the past. We were fortunate. Price of gold was rising. We had good projects, good partners. We raised a pile of money, tens and tens of millions of dollars for the company. We had, good support.
Gotcha. And so when you guys reconnected, were you instantly like, hey, gold's where it's at, but that's something that, we're into? Or like how, because there's so many different things you could mine. Or do you just start mining and it's like, oh, hey, I didn't think there would be all this here, and you have a new metal?
So everybody has their own approach. I think one of the best approaches is to go to the brokers and investors and ask and to try to figure out what they're interested in. So where is the money right now going? And then create something in that. It's almost like this would be like a comment for aspiring entrepreneurs. You can have your own idea. I think that's great. If you think it's a good idea and you want to advance it, great. But you can also look at where the demand is and where the funding is for ideas. AI, right? There was a big push a year or two ago. If you go to your bank or broker and say, what's everybody calling about? And everybody's saying, I've been reading all about silver, or I've been reading all about AI. I want to invest in some AI companies, right? That's what I want to know, is what are they all investing in? Oh, then let's start something in AI that's solid. Well, we knew that investors were calling the brokers about gold. Gold was moving up from $300 an ounce when we started. And when we IPO'd, it had moved up a lot. Money was available for gold companies. So that's what we did. And
Got it.
That was our process.
So when you have to go out and you have to attract funds to get this.
Excuse me, I don't know why I have this on do not disturb. So
I run into that all the time. So you go out there, you can tell, the world wants more gold. That's kind of in vogue at that time. You said, what was it, 2005 when the idea came about?
We incorporated the company in 2005. We had a very nice IPO in 2010.
Okay. And so just to give us an idea, how much funding did you have to do before you actually started drilling and getting into this?
So, the stages are something like this. The initial investment was, say, $100,000 just to get things rolling. That's for myself and my co-founder, and then we brought in a third partner who we were going to build this together. Then to get into negotiations with bigger companies that were shedding their mid-sized projects, this is what was our strategy.
Okay.
Big companies are worth billions and billions of dollars. They have mid-sized projects. It's not efficient for them to advance, but they're still very good projects. So we were going to focus on them. It was something was happening right around then, 2005. The larger companies operating in Mexico were shedding their mid-sized projects. Let's focus on that. We found a few that we were interested in. Say we needed another $500,000 for that process, including due diligence, legals, accounting, and also doing some preliminary work on these projects. And that's when we found some. We signed option agreements where you're going to acquire the right to earn either 100% interest in the project or something less than that, 75%, 50% on the deal. Then we went out to the bankers and brokers. So we signed the deal, go to the bankers and brokers and say, we need an initial $5 million to do drill it, geochemical sampling, geophysics, which is remote sensing, drones, helicopters, or people with a backpack full of instruments walking the property. Need $5 million for that. Raised the money. We had success. Projects looked good. Then we went back for $20 million financing to do a lot of drilling, or $50 million financing to advance the company and IPO. So
Got it. And so you were buying, like when you say they had these mid-sized projects, they were already up, running, and functioning. And then was it kind of plug and play where you just took them over?
Our business when I was there, and I have been involved in producing companies that produce whatever the commodity is, and larger companies produce, but my expertise and my interest is to take it to the point where they're just about to produce. So you find it, you measure it, you try to expand. Hopefully the project's a big one and you drill around it so that you truly understand how the scale of the project. And by doing that, you add value. And then you also, you create a 3D model of the subsurface. That is very, very valuable, because then you can plan a mine. How would you mine it? You can sell that. That is what I like to do. So and one of the very best things you can do around the world is go find old mines. The Spanish Empire was in Mexico for 500 years, mining, and then mining is part of the culture there. One of the things we do in Mexico and worldwide is go find old mines dating back 100 years, 200 years, 50 years even. And it's mineralized. It was profitable at some point. Usually what's happened is that, commodity prices go like this.
Yep.
Sinusoidal. And when they're down, everybody has to walk away from their project, especially if it lasts too long. So these things just get forgotten. The miners move off somewhere else. Well, those areas, when the price is back up of whatever commodity, they can be very highly profitable. Not only that, the very best place to find a mine is find a new mine is next to an old mine. So
it's not so much that like the people that are mining just can't find any more of the commodity, as it is that commodity is no longer, its value is not as high as it was. And that's why these mines become less valuable.
Often. That's very often.
That's interesting.
Yeah, they get a bad.
So just kind of like a question relevant to that, like with modern science, I mean, if you look way, way back in the day when a guy was out there with like a pickaxe and a shovel and, oh, I think I see gold, and everybody celebrates.
Yep.
Do we know, like, the entire globe over by this point, what lies beneath the surface, so that when it's like, hey, we want gold, no, we want, platinum or whatever, do we know exactly where in the world all those sites would be?
No, I would say we do have good knowledge of about 20 or 30% of the globe, and
There's a lot left. Yeah,
it's a lot, and all the easiest stuff to locate has been located, with a few exceptions. Now we're on to the next level of stuff that's a little bit hidden. Either it's covered by what we call overburden, or there's it's below surface and you can't see. Yep. And we need other methods to find it. You have to understand the structure of the earth, regional geology, plate tectonics, volcanoes. What was a volcano 500 million years ago, or 1 billion years ago? Was this the bottom of an ocean 1 billion years ago that has been lifted up? The water's come off, and now there's been an event that has fractured the earth. You need you need 1 billion to 2 billion year old rocks that have been fractured, and then if you need fluids to go up at a certain pressure, certain temperature, and they also have to be laden with the minerals for reasons. And all of that is to be discovered over most of the earth. So the easy stuff has been found, like, you go through the Mediterranean, the Romans were mining very rich veins of silver and gold and copper, but extremely rich, had to be, because they had very primitive tools and primitive technology. But now we can go back to those areas, and those are wildly profitable projects now. With current technology, the waste rocks they left at the surface, there's a whole industry going back to collect all the waste rock that has been left for the past several thousand years at all the historic mines, or even past 200 years. So there's so much more left to discover, not to worry.
Wow. So yeah, no, that is kind of reassuring. Yep. So you did from 05 to 10, these projects in Mexico that were all gold focused. Where did you go from there?
So that was Mexico. That was successful. as we were running up to the IPO, and I was the first shareholder and the president of that company. It's called Gold Group, one word.
Yep.
I was now a semi-successful mining entrepreneur in the run-up to the IPO, and I got invited into other deals. So I joined boards of other companies. I had other ideas that I was advancing with partners and funding folks, but I did want to do a master's in business at an interesting place. So the program I did was called the Sloan Fellowship. It's at MIT, Stanford, or London Business School. You get a Master of Science in business, and I just chose the London one, and I went there, and it was an amazing. So that's what I wanted to do. I sort of studied for a year and a half. So I moved to London, and did sort of what they call advanced corporate finance, lots of modeling on spreadsheets of transactions and finance.
Hop in. Did you find that advanced degree, was that beneficial, or a lot of the work that you're doing, was it kind of like learn on the go, and what I learned 2 years ago is already out the door?
The foundational, and actually works this way with law too. You can have an idea of how things are supposed to be. If say you get onto AI, or you read, just a person who's not a lawyer or a person who's not a finance expert, you can understand 95% of anything without that foundation, the deep foundational knowledge, like where you've actually worked through these things and learned what sits beneath. But the only way to really understand the underpinnings, what's really going on, for example, the Black-Scholes equation, which, values options and that type of thing. Having the insight of what's really going on with that is really valuable. You can take that everywhere and apply it day to day, and it becomes intuitive instead of not really understanding. And same with the law, what's going on. It turns out you can answer with questions just using first principles of law or finance, and use it intuitively, so you can understand. And you also understand why things are the way they are. It's extremely useful. Is different than, say, an MBA, similar, but I didn't do much of the sort of softer courses, HR and that type of thing. It was not my area. I found that hardcore finance stuff extremely useful, even though I don't use it. Okay, to answer your question, I don't use it day to day like that. I don't apply it. However, it helps me manage bankers, accountants, auditors, and understand the transactions a lot better. A lot better than I would have otherwise. It also, as a qualification, helps. I got recruited out of school to work for one of Russia's big companies on their board of directors to help them.
This was out of the school that you did in London?
Correct.
So this was later on?
Yeah.
Okay.
Yeah. I was partners with an Armenian economist at business school on our projects. He became CFO. I got recruited to the board and moved to Moscow, Russia.
Really? Now, what did you think about that? Because you're from Vancouver originally, correct?
Yeah.
So you went Vancouver, London, and now Moscow comes calling. And that was in the 2010s, somewhere in there? 2012. Any hesitation? So were you like all in, or were you a little bit nervous? I mean, obviously you've got the Western world, you got Russia, kind of,
Things have changed. This was pre their invasion of Crimea, takeover of Crimea. So before the sanctions went up in 2014, Russia was still, everybody understood it was transitioned away from hybrid democracy, which is sort of like fake democracy. But it was still open to the world, still an interesting place to invest. There were lots of expats, i.e. Westerners in Moscow, lawyers, business people, bankers, etc. So it was an exciting, welcoming place, enormously fun and interesting. Russia is absolutely full of very smart people. That's very stimulating. I was very excited about it. 2014, invaded Crimea, sanctions went up. Our company, Uzuralzolota, which means Southern Euro Gold, but really their projects were all across Russia. They abandoned their IPO. They were going to IPO on the London Stock Exchange. And so I left around that time. That was the end of that adventure. But I was already building businesses in East Africa. So with a couple of partners, a banker from London and a mining engineer, Canadian, but living in East Africa, we built a cobalt, among other businesses, a significant cobalt company in East Africa, which we then sold to an offshoot of Glencore. Some of your audience might have heard of Glencore.
So when you were working in East Africa, like what was the company that owned those projects, or where was it based?
Vancouver company. We had a really big cobalt and sort of nickel by connection, cobalt assets in East Africa and Uganda. But Vancouver-based parent company, which is typical globally.
Yep.
And then, we had lots of projects, and we ended up selling it to an Australian company, which then moved to Switzerland.
Okay.
Long story.
So did you, just out of curiosity, like going Mexico, Russia, then East Africa, did you find that there was a easier place or a better place to do your type of work, where some were just like, hey, take it and run with it, and others you had a lot of hoops to jump through?
Mexico is
What was some of that like?
Mexico's the best out of them all by a mile. It's a good place.
Really?
The culture is excellent. They're business friendly. It's got some challenges, but it's it's a very good place for business and for mining.
And is a part of that that they don't like, at least some of the narratives we hear, that they don't have as much environmental concerns, that you can, if this is what you want to do and it makes sense, just go for it, build it. Whereas here, you've got to get 1,000 different permits and approvals to even take your first step. Was that a part of it, that nobody was getting in your way?
No, that the way it works globally in mining, I will confidently say, is foreigners and Western companies behave extremely well. And we do everything by the book, by the Canadian book, which I would say is sort of clean as it gets.
Okay.
We do everything by the Canadian book wherever we are. So it doesn't matter where we are, because at some point as you advance the project, well, first of all, there's right and wrong. You want to do what's right, which is a lesson everybody should be applying globally, right? In whatever they're doing, there's right and wrong. And then also, if you want to borrow money from an international lender to advance your project, you're going to have everything done properly anyway, right? You need to borrow $300 million as the debt portion to finance the mine construction. They're going to come and say, where's all your environmental, your wildlife, your archaeological, your, what's going to happen to the groundwater? You have to have done all those studies, and you have to have mitigated risks. If you can't pollute, nobody's going to loan you $300 million if your plan is going to pollute the environment. Those questions generally apply to, in my view, homegrown companies and business people that are very protected domestically. So this would be, you're in Russia and you have Krisha, political protection, or, local protection. You do whatever you want. Nothing's going to happen to you because you're locally protected. Or in Africa, you're connected to the government or something like that. But this is like a misunderstanding I think people have. Plus, we're very human. All these, Westerners, we're human. We want, unless you're crazy, you want to protect wildlife and the environment and the local people, and you want to see them all do well. So no, I guess the answer is no. And I will make a comment about regulatory stuff. All of this, we have to cut regulation. We're going to cut regulation. It's all a bunch of nonsense in my view. It's anybody who politically is trying to get your vote by saying we're going to cut regulations is, in my view, is trying to trick people. You need all of these things. One way or another, you need these regulations. So it does not make things more efficient. It does not. All it does is smooth the way for unscrupulous people. There's a very strong connection between regulation and wealth, right? And there's a reason for that. Now we can get into that another time, but it's an iron relationship. Good regulation and health and wealth of a society. And so that's what I would say about that. You can't get around any of it. Everything is blue chip in all these jurisdictions if you're a Western company operating in these places.
Got it. And so you went from East Africa, you were doing cobalt there. And then was there anything between that and going into uranium and some of the projects you're doing now?
Yeah, a few years. So 5-6 years ago, I left the cobalt company. We'd sold to an offshoot of Glencore. I stayed on as an executive. We had projects in Brazil and Finland and Africa. But then it was time for me to move on. Quite honestly, I went to the beach. I went and sat on the beach, drank margaritas, tried to figure out what my next move was going to be. And I speak French, and I'm a bit of an Africa specialist now. And my very good friend had Myriad Uranium, the company I'm the CEO of now. They had a project in Niger in West Africa, fabulous acreage we call it. That's land, the land. And he was having trouble there, and he needed somebody who understood Africa and spoke French. I said, I'll help you for 3 months. I left the beach, took the No More Africa sticker off my fridge, said I needed a break from Africa, took it off, said, I'll do this for 3 months.
Yeah.
Turned out to be fabulously interesting, amazing. Niger is a beautiful country, amazing uranium. So I agreed to help my friend. That's what happened. I got kind of a little bit maneuvered into being CEO and stuck around. I put a bunch of my own money in the company. I raised money for Myriad in West Africa. And then there was a military coup. The junta did a deal with the Russians to some degree, kicked out the Americans and the French. Russians took over the American air base. And we said, okay, we're out of here. So we dropped our project. We pivoted to the US, immediately to Wyoming, which is why we're in Wyoming. We wanted to be as safe and and our people were
how quickly, just to hop in, how quickly does that happen? Is it like one day everybody's going to work, we're doing good here, and then bang, it happens, and the next day you're on a plane back west?
Our areas were in the kind of adjacent to the Sahara Desert, definitely desert in the middle of Niger, very hot. I mean, it's 45 degrees or hotter. Sorry, that's Celsius. What is that for you guys? 120 or something like that. And very hot. We had, French and Canadians and South Africans and local Nigerians all in the middle of nowhere, 1,000 miles from nowhere, flying drones, living in doing the work on our project, remote sensing. You can fly drones over the land and you can pick up the radioactivity, right? Thorium, uranium, potassium, they give off a signal and you can map the surface and a little bit of the subsurface. And so we were doing that. Military coup hits. No fly zone, no movement. Our people were trapped in the Sahara Desert for a long time. There's nothing we could do. I happened to be back in Vancouver at the time. How do you get your people out? Well, that's a story for another time, but eventually we got them out.
Jeez.
And of course, everybody's extremely scared and worried. And, that's Africa. And in fact, that's lots of places, very uncertain.
Yeah.
And so the junta is still there. They put the democratically elected president or leader of Niger. They put him under house arrest. As far as I know, he's still in there. Very stressful, but that's the business. It's wild.
That is crazy. And so you just go straight from the Sahara Desert to Wyoming?
So we had a bit of a market cap still. It takes a while because nobody knew, okay, there's a coup, but maybe the coup there'll be a counter coup. So there was a bit of a wait and see period where we were wondering what was going to happen in Niger. We as leadership thinking, well, shoot. And when I've had a lot of experience in Africa over years and years and 10, 12 years at the time, I thought, I've seen this before. I've been involved in lots of crazy stuff. I'm done. I had the sticker on my fridge, no more Africa. Somebody's telling me. So let's look for a good project in the US. We were very lucky. Uranium happened to be in a bit of a lull. We acquired an option from Rush Rare Metals. That's our option ore. They have a very good project in Wyoming. They were focused on their project in Quebec. So we optioned this and we abandoned Niger and said, whatever happens, best of luck. Government, you can take the project back. And then we moved on with our lives. And that's what you do. Mining is, things just happen very fast.
And so that's like that, for instance, when that coup occurred, now the folks that just took over, that's theirs now. They just got everything that you were working on.
Yeah.
Wow. That's amazing. That's kind of scary too, but
absolutely. But there you go. I mean, however, how are you going to finance that, right? Who has the money? The money does not reside. The Chinese don't like to explore particularly. They like to extract. And there's a lot more exploration work that needs to be done at our project in the surrounding areas. So the Chinese aren't necessarily going to come in and buy it all with cash. The Russians just want to they want to cut deals with military strongmen for gold and diamonds. And they do this sort of dictator support service thing where they'll go in and they have the sort of the kill squads that support the dictator. And in return, they take gold and diamonds. Well, that doesn't really apply to uranium particularly. So how is the junta going to advance an exploration development stage uranium project? They can't. Also, uranium is a highly scrutinized commodity. And so on the one hand, we gave it back to them, but there's nothing they could do with it.
Yeah. So wait and see if it returns to normal 10 years from now or something.
That's right. Yep.
Yep. That's interesting. So you came to Wyoming. Was anybody working this acreage or this site in Wyoming, or no? It was just kind of a rumor and you guys swooped in and took it?
We swooped in. We knew that it had produced uranium back in the early Cold War, 50s and 60s. But Union Pacific Railway had worked our project. We found out after we signed the option, actually, right after we signed the option, we found out that our project was actually a big project. There are lots of forgotten big projects in the world because of various reasons. It just happens. Everybody, there's not, isn't perfect information in the mineral space. You know, if people who are outside the business go, well, how could Union Pacific and Southern California Edison spend 117 million Canadian, call that, 90 million US on our project in the 1970s? How is that forgotten? Well, it's not uncommon. So we acquired this project when neither we nor our optionor partner understood the project fully.
What is an optionor partner? What does that even mean?
Good question. So in any technical terms, stop me and I'll explain. So how it often works in mining is there's an owner of a project. They don't have the resources or the interest in advancing that project because they're doing something else. But because of reasons, they own a project. They don't really understand the value of it, nor do they care, because it's not efficient for them to find out, to investigate that project. They have a business model. They've raised money from investors to do something. In Russia's case, it's a company, a Canadian company, also Vancouver-based. They have an old French government project in Quebec called Boxy, which has high niobium and high uranium. They're focused on that. They happen to have this Wyoming project, which is the subject project that we're talking about. They happen to have it. They'd never invested any money in it. They weren't sure what they were going to do with it. They didn't really know what it contained, nor do they care. So what happens in mining is this represents an opportunity. If it's a good project, we go to them. We went to them and we said, we would like the option to acquire your project. In return for the option, we want the option to acquire 75% of your project. That's what it was. In return, we will do the following. We will spend $5.5 million over a few years. We will pay you a couple million shares of our company so that if we do well, you do well. Also, your 25% that you keep, the value of that will go up because we'll invest $5.5 million. Maybe that will create $100 million worth of value. And your 25% will be worth, $25 million for very rough numbers.
Yep. So
let us create value for both of us. If we satisfy the terms of the option, so there's a checklist of things we have to do: make payments, pay cash, spend cash, etc. If we do all these things legally, we get 75% ownership. That is our option. So they are the option, or legally, they're the one granting the option. We are the optionee. It's a bit like in real estate, and you have the mortgagor and the mortgagee. The mortgagee is the borrower. The mortgagor is the bank.
Yeah. And now, just like out of curiosity, because obviously you've had quite some experience, but you've bounced around different companies, different parts of the world. When the optionor, like in this instance, are they like, hey, Tom's working with that company, let's let them buy in? Or are they looking at Myriad and saying, okay, we know these guys, they're reputable? Like, how are they vetting when it seems like there's so much just kind of like moving around, when they want to make sure they get at least a pretty good guy in there that can create that value?
It's pretty hard to break into this business unknown and do significant deals because trust is very important in this business and track record. Like in any business, it's easy to be tricky, but you only get to do that once because the ecosystem finds out. So if you have a good track record of building legitimate companies that you grow them, you make people money, you have exits, you deliver a return to shareholders, and you do that a few times, and you're understood to be highly trustworthy. The bankers know you, they trust you, all the lawyers, the stock exchange, there's a whole regulatory background. If you have that and you all like each other, it's a niche business. We all know each other, or we're just a few degrees of separation away. Somebody suggests doing something, I immediately pick up the phone, call a few people. Hey, tell me about this person. And they'll give you
So is it kind of a small world there and everybody knows each other to an extent?
Yep. And if you screw people, you're shut out.
You're done. Yeah, you're out.
That's the way it works. It's great. It's a very nice, yes.
Like who's, if you don't mind, like who's your biggest competitor, like right in this space? Are there any like household names or is it a lot of kind of ones that folks haven't really heard of that are doing all the work here?
Okay. There are a few really big companies, global companies that are in this space. They are the mega companies, and They're called Cameco, is a Canadian company. That's the Western world's big uranium company, is a Canadian company,
Okay.
Cameco. And they have big operations in the US and around the world, but
Yeah.
particularly Canada. Then there's a French company called Orano. That's owned by the French government, and they're global. And they have projects in the US and Canada and globally. That's the other big uranium company. Then there's the next tier of mid-size big companies in the uranium space. That is UEC, Uranium Energy Corp, UR Energy, Peninsula, and a bunch of others that are there's 5 or 6 sort of mid-tier companies. I would say
Got it.
there's a cool, yeah. And then there's probably 50 other companies, very small ecosystem. And we're in that third tier.
Got it. In the option, or are they looking for one of those three? Is there pros and cons to each? Or is it like in the venture capital world, where, hey, I invested in this little thing and now I want Apple to buy it. And that's the dream, to have Apple or Meta or one of these guys. Is it kind of like that in this, like the commodity space?
Absolutely. M&A is very active. Everybody's watching each other, hoping to acquire each other if it's a good deal. We all want to be acquired by one of the big companies. They want de-risked assets. So, and as you de-risk, your value goes up because the uncertainty has gone down. The game is to de-risk your asset, invest a lot of money, de-risk it, increase the value from, say, 50 million to $1 billion, and then sell to one of these bigger companies.
And that was kind of lead into my next question. So like when I was going through some of your bio here, obviously right now, Myriad, your company, has the Copper Mountain project in Wyoming. This is from the bio, encompasses over 18,000 acres, underlain by an estimated uranium endowment exceeding 600 million pounds, a resource scale supported by more than 2,000 historical drill holes. Then it goes on to say Myriad is in the process of selling 90% of its Red Basin, New Mexico project to Sumitomo. So why, like that part with the sale, why would that occur? Why would you not want to just retain whatever that particular project was?
And by the way, I just want to, for anybody who heard me say mortgagor is the bank, it's not. It's the owner of the real estate. Mortgagor, mortgagee.
Yep. No, that's fine. Thanks for clarifying.
The opposite of what it is in mining. Okay, so we have a New Mexico project. It's called Red Basin. It's a smaller project. It's in a very cool uranium basin with high-grade uranium and vanadium, which is a highly in-demand mineral. And why would we? So we just sold 90% of that project to a company called Subatomic, which is new, which is owned by 2 venture capital firms. One is called Overmatch. That's an advanced weapons tech venture capital firm out of Austin. And the other owner is called 8VC. That's more of a Bay Area technology firm. And we sold 90% of our project because we paid a very small amount initially 15 months ago for it, 525,000 Canadian, which is, call it 380,000 US.
Okay.
Tiny amount for this very good project. We were opportunistic. That's something that happens in our business. Somebody's in distress. It's a bit like a sale of real estate when somebody,
Yeah, that's what I was going to say. Same thing.
You go in there and you seize it. And we're all very entrepreneurial and aggressive, frankly. And so we went and bought it, but it's a very good project. So this venture capital firm, 8VC, by the way, is Peter Thiel, PayPal, Joe Lonsdale, Peter Thiel, et cetera, and others. So it's very cool partners for us to have. And Overmatch, also very advanced group, well-funded. We want to get into bed with them. I hate, just to say it, put it that way. What the heck? We're going to the opportunity was to form a strategic alliance, retain 10% ownership, and get 3.3 million Canadian cash, 2.5 million US. It's a cash kicker. That's why we did the deal. It's a great deal. So we end up with a strategic alliance with them where we're going to hopefully do future deals with them. What I told you about being opportunistic and having a pipe, knowing what to get and how to find out about opportunities, that is very specialized. Like you can imagine coming from New Jersey, doing your business. How would you ever find out about an opportunity in Mexico that's a silver mine, a historic silver mine that is suddenly for sale, that is going to go tomorrow, and then the value is incredible if you are managed to acquire it in one day? You would never be able. How would you ever figure that out? Well, that actually goes for weapons tech and technology VCs in the Bay Area who want to get into uranium. How would they find a uranium project like this that is, so we can help with that because we're experts at that. They're going to come in and advance the project because they need uranium. stay tuned on that. Very interesting group. Extremely.
Yeah, that is really cool. And it's like when I talk with some folks like back in the day that were very big in real estate, and they say it was just different, where it was
Yep.
like a lot of inside deals, where now it's kind of like everything is public, everybody could see everything instantly. It seems like you don't have those asymmetries where now there's some more kind of hidden information that you can specialize in still.
Absolutely. We do not have like, I don't know if it's the same in the US, but an MLS database for all the real estate for sale, right? You put
Yeah,
something up for sale, it's on the system. You can search it. Even if you're in Vancouver, you want to buy something in New Jersey, I could just
yeah,
search the database, what's for sale. That's very efficient. We don't have anything like that. There's a lot.
yeah. No, that helps you. You got to keep it that way.
Yeah, it's cool.
So yeah, definitely. And now, if I'm reading this right, you're also currently the CEO of J2 Metals as well.
It's not uncommon. And that's a legacy of the past 6 years ago. We started a junior mineral company. We raised millions of dollars, my business partner, Toby, and I, and it was private,
Mhm.
not listed on the stock exchange. We had a very high-end technical partner that became our largest shareholder. And we had a project in Alaska, gold project in Alaska, and a mixed metal project in Quebec. And we were raising money to advance those projects. And very good projects. They have historical drilling, historical work done by big multinational companies. And we got them. Great opportunity. We're all excited. And then the price of gold and the price of everything collapsed, and the market for our business evaporated. So there we are, holding a flaming paper bag full of whatever. We'd spent all this money. We always invest a lot of our own money so our fortunes as executives in this business go up and down like crazy. Five,
Yeah.
6 years ago, the business evaporated. We were left with these two projects, no money in the bank, and my partner and I cutting monthly checks to keep this company alive. Finally,
Wow.
a year ago, the market recovered, copper, gold, etc., and we went public. So it's a legacy of my past, which I never thought would come back. But this company has really good assets, J2. And I'm CEO because I was the leader of the company when we built it private, taking it public. And now we have to figure out what to do because typically I would not stay CEO of two public companies at a time.
That's what I was going to say. Do you ever feel like you almost get spread too thin? Like it sounds like just so many different projects, or is it kind of like once you make that decision, you let it run its course and you can quickly move on to that next one?
You can get a great team and delegate a lot of the stuff. But if you don't have the right people to delegate to, then you would be spread too thin. Also, you typically don't let the situation last too long where you're running two companies at the same time, conflicts of interest and all that type of thing.
I imagine. Yeah, I imagine there would be.
However,
I just have
everybody understands that I owe an obligation to my original investors to see this through and try to get them their money back and even make them a lot of money. So
Mhm.
even the uranium people understand, okay, this is a legacy project. My job is to make everybody money that invests. And
Yeah,
I owe that obligation to everybody who invests. So sorting that out,
certainly.
and we'll see what happens here over the coming months.
So just a couple of questions I had to kind of wrap all of this together. I know at the outset you said a lot of what your business is you're kind of listening to the world, you're listening to the
Yep.
demand, and then you're saying, okay, we're going like where they're telling us to go. Is there any of that kind of going to where the puck is headed before everybody's saying that, where it's kind of like pick your commodity? I know no one's talking about it now, but you, Thomas, you have some foresight that I think that in 10 years is going to blow the world apart.
It's
Do
extremely,
you ever do that, or does that not make sense?
absolutely. I myself am not the best at that as an individual. I want to be, but I have several partners who are extremely good at that. They know what's going on. One past partner, he just not doesn't happen to be part of the uranium deal, but his name's Andy. He was the one that years ago said cobalt is coming. It's an essential ingredient in high performance electric vehicle batteries and your iPhone and all that sort of thing. Cobalt is gonna really rip. Let's get involved in cobalt. And brokers and investors are starting to talk about it. So we
Mhm.
leaned in East Africa and acquired all the cobalt prospects in Uganda, which used to have the world's top copper mine in the 50s and 60s with cobalt as a byproduct. Canadian
Mhm.
company used to run it there, Falconbridge. And so we went and scooped up all these projects, and the price of cobalt the next year just went like this, straight up.
Wow.
So that is essential, what we're doing. We're also doing that with lithium to some degree. Lithium went way up. My partner in the uranium company was the CEO. His name's Simon Clark. He's a chairman of Myriad Uranium. He and I have done a number of things together. I love being his partner. He was CEO of American Lithium up until recently, which he took from a few tens of millions of dollars market cap up to 1.2 billion. Price of lithium subsequently crashed, but it's coming back. And he's such an expert at lithium that he understands what's coming. And so you do need to be an expert and have a sense of things. We understand the market dynamics of lithium. That's not going to be my business, by the way. I'm just sort of observing in the uranium business. But others are going to go straight into lithium here very shortly. Price of lithium is definitely going to go back up, and everybody's leaning in and trying to get the best projects. So that's an example. Tungsten is coming. Antimony, which is used in steel and advanced weapons and stuff like that, fire retardant thing. Price of that is just going parabolic. We know what's coming. We sense it. If you have your finger on the pulse. So it's an extremely important part of the business. Otherwise, you're left behind and you're just sort of following others. You do not.
Is it as like in your spaces is it as transparent as say the stock market, where where you have the efficient market theory that every possible piece of data you could think of is already immediately reflected? Do you think it's that quick in the commodity space that you're in, or is there a lag where
I don't think it ever catches up? Our business is incredible. It is so fun. It is so interesting. It is so inefficient. There is, absolutely, we all understand efficient market hypothesis and all that type of thing where, and we do hope that sufficient information, if you have a good project, sufficient information comes to light, the market can absorb it and you get repriced way up, ideally. Because you got it when things were wildly inefficient and nobody understood your project and commodity and all that sort of thing. So it is this is the most inefficient sector that I've ever, and it's fabulous. It's so interesting. We can get it. 14 months ago, we got it in a project, paid 525,000 Canadian. We are now 14 months later. We are joined up with, absolutely amazing 8 VC overmatch. We're getting 6 times cash on cash, plus a 10% free carried interest through production. It's could be worth tens and tens of millions of dollars. You only get that in the mineral space. I think oil and gas can also be very exciting and interesting, but I just don't know anything about it. Yeah.
That's really cool. And so in closing, because I know what so many of my listeners are going to be asking is like geopolitics, again, looking at the macro level, the narrative out there is, and you kind of hit on this a little bit, that China is buying everything and we're losing to China. But then you said that they don't really want to get so involved in the exploratory side of it, if I heard you right. So can you give us like a landscape of like, not maybe just US and China, but like what's the world order of these really, precious commodities that are going to maybe dictate some of the future here?
Well, if I could jump right to one topic, which is the refining of specialist minerals and metals and rare metals and etc. China 30 years ago decided they wanted to dominate the processing of rare and specialty metals. They have an absolute lock on 15 or 20 commodities that are only efficiently processed in China. Even if they don't produce any of that stuff in China or very limited amounts, they are the only ones that are able to create the finished products and certain types of finished products that are variations on the rare earths, yttrium, neodymium, if I pronounce that correctly, even cobalt, etc. Really, the United States, Western Europe, Canada, we simply cannot refine these things in any quantity and at any scale. And in China, these processing centers are right beside the battery factories, the iPhone factories, the whatever, Google phone fact, and then everything else that requires really high-end magnets, batteries, switches, transistors, all that sort of thing. Of course, they get transistors from Taiwan, but in China, so in South Korea. But this is the key issue. I'm not so worried about copper and uranium and gold and whatever else globally. That all sorts itself out reasonably well. It is this refining issue that is the world cannot catch up, and tomorrow China could close off the market, and the United States the next day would not be able to make fighter jets, satellites, missiles, rocket launchers, tanks, whatever, drones, nothing. This is the key global issue in my view right now. I could talk about everything else too, but if you want, but this is
no, please. I mean, it's fascinating, and I think these are things that people need to learn about. Why is that? Because why are we hearing, for instance, with China? I believe it was the Silk Road that 2.0 that they want to acquire all these ways to harbor all these materials.
Yep.
But you're saying that that's not really the worry; it's the refining process. If that's the case, like, how did the U.S., Canada, everybody else, how did we get so far behind? And why are they so good at it? Like, what's the disparity there?
They threw the textbook out of let private sector decide what to invest in and all that sort of stuff. They very smart, strategic thinking on the part of the Chinese with a view decades out. If we get a lock on these things, then we will control the galaxy effectively. So they really did think about that. In the West, it's hard making a long-term plan, and the same goes with building nuclear power plants. The Chinese have made a plan. We want to have cheap electricity for decades and decades. That is the long game. So then they've made this, they're just going to reproduce these cookie cutter large-scale nuclear power plants. So they made a call. The world's going to need these things. Also, geopolitically, things were different up until a couple of years ago. Especially things were different 10, 15 years ago. You have, getting back to the textbook, economics and international trade textbook, everybody gets much richer if all the countries globally are very connected, right? That's how you create wealth. That's how the U.S. has had really fast growth, is not making anything. Instead deciding what to get made and then outsourcing the manufacture and supply chains, that sort of thing. China engineered its economy to service that. And in the West, we didn't need to make all these things. We didn't need to refine cobalt. The Chinese are doing it much cheaper and better than we could do it. Magnets, all that type of thing. All this exists if all the countries are cooperating. We had something very in advanced, ready to sign the Trans-Pacific Partnership. This was 13 years ago or something like that. Trans-Pacific Partnership, which is a trade agreement, the Pacific, Canada, U.S., etc., Asia, all these countries, very good trade agreement that would have managed China very effectively. It was negotiated under Obama, so naturally Trump got rid of it without understanding it at all, in my view. 0% understanding of what it was going to do. Fabulous agreement that would have resolved all these issues that we're talking about right now in a really smart way, which is maintain the links and also regulate China in a way that would actually give America the advantage in the relationship.
How so? Like, how would, in that scenario where you're saying almost we're not going to compete, we're going to rely, where do we get the advantage in that?
Because of it, so long as everybody's copacetic and getting along okay, the trade links are going. Because China, back to economics 101, because China had invested for decades in the refining of these things and preparing them for manufacturing processes, the U.S. is going to cost the U.S. 10 times what it does China to refine these things itself, the U.S. And we require decades of investment, and it's never going to catch up. So long as the linkages are efficient and friendly, everybody's getting along fine, then you get your iPhone, the U.S. gets its iPhone for $1,200 instead of $2,500. And U.S. companies could invest in China, Apple, for example, factories, outside sources to Foxconn and others, but just sake of concept, or Tesla or whatever. You get to American businesses invest in China, Tesla, factories, then get the batteries for $10,000 for a set of batteries for high-end Tesla, and then sell it back into the U.S. The overall economic impact of all of that, doing the engineering in the U.S., outsourcing the manufacturing, getting the cheap battery chemistry and the cheap battery manufacturing from China and selling it back in the U.S. is extremely advantageous to everybody in the U.S. and in China overall. You just tot everything up on a spreadsheet, and it makes the U.S. much richer. As soon as you cut that off, however, you make it more difficult on the supply chain and you also tariff in a nonsense way, completely unthought through Chinese manufacturing. When that breaks down, all of a sudden your Tesla, first of all, you can't make it in China, or it's difficult and you can't import it. But regardless, the cost of the battery goes up double, triple, quadruple.
Yeah.
And there's no way for you to make it inside the US, especially as things go. China has you by the you know what.
Yeah.
There's nothing you can do about it. And there's no way for you to quickly build manufacturing capacity and refining capacity in the US. So what we had before was very efficient and wealth building international connections and supply chain. Very good for the United States. Wealth.
Yeah, no, I agree. And I from a economic standpoint, I agree. Obviously, that is the most efficient way to get a cheaper product through that outsourcing. But I guess the reliance on what if they ever did become a real adversary, that's the fear. Like you said, they could just flip a switch and it's like, oh my gosh, we're frozen.
And I guess that's what you're asking, right? Yeah, okay. Everybody took their eye off the ball decades ago. And it was but China, extremely, just like the Russians in Western Europe, very smart, very efficient at constantly keeping Western countries off balance in terms of building up a defense against what they're doing in China or Russia. And in China's case, they want to build up this sector and not have competitors. And in Russia's case, they wanted Western Europe to be reliant on Russian gas for their industry. How do you do that? You go into the US with money, with lobbyists, and you undermine the planning for, the refining industry for rare metals and, battery, things you need for high performance electronics. What do? You make the argument in Washington, D.C. that, it's too expensive and not efficient. You're going to spend 10 times what China can deliver the product for. It's going to cost you 10 times as much if you build up the sector here in the US. So don't do it. And then everybody is very happy to say no because everybody's making so much money. It's very easy to do that. The Russians did the same in Western Europe. Yeah. Just buy our gas. It's be way cheaper than building nukes or coal-fired plants, et cetera. And from both sides, lobbyists and cheap, the cobalt, we'll sell you the cobalt for 10% of the cost or of what would be your cost if you tried to do it at home. You do that for long enough, nobody builds a competitive refining and manufacturing. And that's the story.
And I guess, it makes sense. And I guess that's kind of how we end up here. And do you think it's that long of a period of time? Like you hear right now with all the chip race that now the US is pouring tons of money into Intel, for instance, to say we need to have something so that we're not just reliant on Taiwan and God forbid something happens, again, the switch goes off. Yep. Can we do the same thing with refining, or is it just like you can't? You need to outsource things.
For a couple of things, you can catch up, but no, the game is lost. And of course, all these things are my personal views, but have to protect Taiwan. You have to be an ally of Taiwan as if you're the United States. Protect them at all costs, right? I mean, if China gets it and decide, the U.S. is lost. Intel just simply has no chance to catch up. That's my view.
Yeah. And, no, it's a good point.
Yeah.
It's crazy or ironic, I should say, because we're having this conversation, and I don't know if you read the Wall Street Journal, but one of the top headlines this morning, it was Xi's China, dazzling technology, military muscle, and an economic mess. And it's just kind of, you see all these different things kind of playing together. I guess a lot we'll have to wait and see on, but I guess if you were, in the driver's seat of the whole thing, is there anything you would change today that you would
absolutely focus on international cooperation and trade, repair diplomatic relationships? I mean, there's no place for tariffs in a modern world. There just isn't. So that, any economist, that's page 1, chapter 1 of any economics textbook. Repair all the trade relationships. Now, China has political problems relative to the Western philosophy of openness and fairness and equity and democracy and all that type of thing. So how do you balance that? However, you have to repair all these trade relationships and immediately focus on that. Good things will happen. I mean, if everybody is trading efficiently, then everybody's income goes up like crazy. and costs go down. You see that with the UK and Brexit. I mean, they're 10% behind the 8 ball relative to where they would have been if they hadn't left the EU. And people are much poorer there. Their taxes are very high. All of that could have been avoided. And that's what the Western world has to do too, is repair all these relationships, the trade relationships. I would do that immediately. The only thing that's happening is unemployment, and the U.S. economy is going to tank, and there's no reason for it to not happen. That's in process. You can see with everybody check out the IMF numbers and World Bank numbers, not necessarily the White House numbers, but
no, fair enough. And this was really, really interesting. I'm glad you made time for this. It's I think these are things that impact everybody every single day, and we don't fully understand it. We don't see what's underneath the hood and how it all operates. So I found this to be quite fascinating. And of course, there's a gigantic economic impact where it seems like as we're having this conversation, there's this constant tension of working together, but then always this itch to kind of decouple. And it seems like the US would decouple if we could do any of this stuff. And China would decouple if they could have a consumer base like the US domestically.
Great point.
So it's like we're just stuck together.
Consumer base is dangerous for them politically, right? So they're kind of always striking that balance. They need it because you need, if you're an economics person, something called TFP, total factor productivity, capital, labor, TFP. And they just have never been able to build that up, and they're working on it. But there's a danger in that inherent, because if people are free, that could be destabilizing politically. But anyway, wonderful topic. Obviously, I could talk all day about it. I love it.
Yeah, I appreciate it. I could learn about it all day. This is very interesting.
Cool.
Last question I have for you to kind of tie it all together. You've traveled the whole world.
Yep.
Do you have a favorite spot that you've been to?
Well, that's a good question. That's cool. Jerusalem. I think Jerusalem is the most interesting place.
Really?
It's just a wild place. It's full of history, energy. You've got the 3 monotheistic religions there. The food is great. I'm not Jewish myself, but I just love the worlds are colliding there. And so if you like stimulation, I think Jerusalem is extremely, and I love history. My undergrad was in classics, Roman history and Latin and all that stuff, and Greek. So I just I think that's a very interesting place. And that's a little outside, I could pick other places where, you want to have some fun or that are beautiful, but Jerusalem, very interesting, extremely interesting place.
Noted. Yeah. Appreciate that. If anyone wants to learn more about you, these companies, and what you're doing, is there anywhere listeners could follow you or kind of keep up to speed?
Yeah, I'm on Twitter, personally, TD Lamb, like the animal, TDLAMB. Our website's myriaduranium.com. My phone number is out there. People can WhatsApp me anytime they like. And, please follow us on social media. We're always keeping in touch.
Cool. Well, Tom, thank you very much for the time today. I found this very informative, and hopefully we can all keep in touch as well.
Yeah, I look forward to it. Thanks for a very nice conversation. Yeah.
Awesome.
All the best.
Well, thank you everyone for tuning in to another episode of the Caderna Podcast. I'm your host, Brian Caderna. As always, don't forget to like and subscribe wherever you're watching or listening. And I can't wait to see you on the next episode. Take care.
This podcast is intended for the general public and for informational purposes only. The show does not provide any recommendations or investment advice regarding any specific account type, service, strategy, or product, or to otherwise act in any fiduciary or other capacity. Please contact a financial professional for guidance and information that is specific to your situation. Brian Caderna does not provide tax or legal advice. Please contact your accountant or legal advisor to discuss your situation. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Caderna Financial Team, and opinions stated are their own. All investments contain risk and may lose value. Past performance is not a guarantee of future results. References to specific securities, asset classes, and financial markets are for illustrative purposes only and do not constitute a solicitation, offer, or recommendation to purchase or sell a security. Brian Caderna is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS. OSJ 300 Broadacres Drive, Suite 175, Bloomfield, New Jersey, 07003. Phone number 973-244-4420. Securities products and advisory services offered through PAS, member FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Caderna Financial Team is not an affiliate or subsidiary of PAS or Guardian. California Insurance License Number 0K04194.